Welcome back, everyone. You're tuned in to The Crypto Strategist, the channel where we break down the crypto market in a way that actually makes sense, keeps you sharp, and hopefully keeps your portfolio moving in the right direction. I'm so glad you're here today because we have a lot to cover, and I mean a lot. The market has been doing some interesting things over the last 24 to 48 hours, and there are several major developments that every XRP holder, every crypto investor, and frankly every person paying attention to global financial markets needs to understand right now. Before we get into all of it, I just want to say, if you're new to the channel, hit that subscribe button, drop a like, and let's send some good energy into the universe together. Now let's get into the meat of what's happening, because trust me, you do not want to miss this one. The next few weeks could be absolutely pivotal for XRP and the broader crypto space. So let's start with where we are right now in the market, because context matters more than anything when you're trying to make smart decisions with your money. As of today, XRP is sitting right around that $1 level, up roughly 2% on the day. Now I know some of you are looking at that and thinking, that's not exactly earth-shattering, and you're right, it isn't. But here's the thing, the broader crypto market has been recovering over the past couple of hours. And that recovery is meaningful because it's not happening in isolation. Bitcoin has climbed back above $60,000. Ethereum is seeing a nearly 4% pump. And Solana, which we'll get to in a moment, has absolutely ripped off its recent lows. When the tide starts to come back in across the board like this, it matters for XRP too, even if XRP's individual move looks modest right now. Patience is the game here, and understanding the macro picture is everything. Now let's talk about Solana for a second because it's been one of the more interesting stories this week, and it actually tells us something important about XRP as well. Solana has jumped roughly 18% over the last 3 days, and that's an impressive move by any standard. But before you start second-guessing your XRP bags and wondering if you should have been in Solana, let's put some real numbers on the table. Year to date, Solana is down about 39%, XRP is down about 42%, Bitcoin is down around 30%, and Ethereum is down about 33%. What does that tell you? It tells you that Solana's recent big move was essentially it catching up to where the rest of the market already was. These catch-up moves happen all the time in crypto. We've seen XRP do the exact same thing, a sharp explosive move after a period of underperformance. The point is, there are always opportunities in this market if you're paying attention and you're positioned correctly. That's exactly why staying informed and staying subscribed to a channel like this matters so much. And speaking of opportunities, let's talk about one of the most important things happening in Washington right now, because the regulatory environment is shifting in real time, and if the Clarity Act becomes law this year, the entire crypto market could look very different very quickly. Here's where things stand as of right now. The Senate is out on recess until July 13th. But that doesn't mean nothing is happening behind the scenes. During this recess period, White House staff and industry stakeholders are actively working to hammer out the remaining issues before the bill comes to a floor vote. The sticking point right now is ethics, specifically whether the White House will agree to a strong ethics framework that covers President Trump's own crypto-related business interests, which have reportedly generated over $2 billion in new wealth for him since he took office. That's a significant number, and it's the kind of thing that makes it very difficult for Democrat lawmakers to simply look the other way and sign off on the bill without some kind of accountability structure in place. Now here's why the timing on the Clarity Act matters so much, and why the next 2 weeks are being described by many observers as potentially decisive. When the Senate comes back on July 13th, Senate Majority Leader Thune is expected to prioritize the NDAA, that's the National Defense Authorization Act, during that first week back. That could push the Clarity Act to late July or even early August, and here's the problem with that. Congress goes on summer recess in early August. Most people who follow this closely believe that if the Clarity Act does not pass before that summer recess, the chances of it becoming law this year drop dramatically. The bill needs 60 votes to pass in the Senate, which means it needs at least 7 Democrats to cross the aisle in addition to full Republican support. And full Republican support isn't even guaranteed right now. 2 Republican senators actually voted against a similar bill called the Genius Act not long ago. So this is genuinely uncertain territory, folks. But uncertainty cuts both ways. If this thing passes, it could be a massive catalyst. Let me tell you why I think this matters so much specifically for XRP. Because some of you might be wondering why we keep coming back to legislative developments on a crypto channel. The answer is simple. Regulatory clarity is the single biggest unlock for institutional money in the crypto space. We've been watching from the sidelines as major financial institutions, asset managers, and banks have been cautious about deploying serious capital into crypto. not because they don't believe in the technology, but because the regulatory framework in the United States has been murky for years. The Clarity Act, if it passes, would provide the kind of legal certainty that allows those institutions to move with confidence. And XRP, because of the XRPL's infrastructure, its speed, its cost efficiency, and its focus on cross-border payments and real-world asset settlement, is extraordinarily well positioned to benefit from exactly that kind of institutional adoption. This isn't speculation. This is what Ripple has been building toward for years. And on the topic of institutional adoption and what comes next for the XRPL, there's a development from Ripple's development community worth discussing right now. There's been growing conversation around the XRPL lending protocol and why lending capabilities may actually be the critical next step for driving institutional engagement with the XRP Ledger. Think about what's happening in the broader tokenization space right now. We've talked on this channel before about the DTCC and the potential for real-world assets like stocks, bonds, and even real estate to move on-chain in the coming years. That's not a fantasy anymore. It's a conversation that's happening at the highest levels of global finance. And the point being made by Ripple's development community is an important one. Capital markets are not built on asset ownership alone. They depend on financing. Lending, borrowing, collateralization. These are the mechanisms that make capital markets function at scale, and if those capabilities are built into the XRPL, it becomes dramatically more attractive to the institutions that matter. Now let's shift gears and talk about what's happening with Strategy, the company formerly known as MicroStrategy, and Michael Saylor, because this is a big story today, and it's directly affecting the crypto market right now in a positive way. Over the past few days, there's been genuine fear swirling around the possibility that Strategy's financial structure could become unstable. The concern was centered around STRC, which is one of their preferred stock instruments, and that instrument had depegged significantly from its target value of $100, falling all the way down to around $71 at its worst point. That kind of depegging raised alarm bells because it suggested that investors were losing confidence in Strategy's ability to manage its obligations, and some feared it could force Saylor into a situation where he'd have to sell large amounts of Bitcoin into the market, which would obviously be very negative for crypto prices across the board. Here's the news that came out today that changed the narrative. Strategy has officially announced that it now has the ability to sell Bitcoin in order to fund its operations as part of a newly articulated capital framework. Now, I want to be very clear about what this actually means because the headline sounds scary, but the reality is more nuanced. The company currently holds approximately $2.55 billion in USD reserves and has about $1.25 billion in what they're calling Bitcoin monetization capacity for reserve building. Their preferred dividend coverage stands at roughly $3.8 billion, which is enough to fund dividends for approximately 25 to 26 months. The fact that they now have a formal mechanism to use Bitcoin for operations doesn't mean they're selling. It means they have a structured, disciplined plan for managing liquidity. And the market has responded positively, with both MSTR and STRC recovering significantly today. What's particularly interesting about Strategy's announcement is what it does psychologically for the broader crypto market. One of the biggest fears hanging over Bitcoin and crypto in general has been this idea that Strategy could become a forced seller, that circumstances could compel Saylor to dump massive quantities of Bitcoin onto the market in a panicked, uncontrolled way. Today's announcement essentially says, we have a plan, we have reserves, we have mechanisms, we are not going to implode. That removal of uncertainty, even if it's partial, is meaningful. STRC jumped from around $71 back up to $83 after this news. MSTR stock was up around 12% on the day. Bitcoin moved back above 60,000. These aren't coincidences. Uncertainty is the enemy of price appreciation, and anytime you remove a significant source of uncertainty from the market, you tend to see prices respond accordingly. This is exactly the kind of macro context that shapes XRP's environment, even if XRP isn't directly related to Strategy. Now, I want to be balanced here on the Crypto Strategist, because we don't just bring you the good news, we bring you the full picture. And there's one international development that deserves serious attention right now, and that's what's happening with the Japanese yen. The yen has fallen to its weakest level in approximately 40 years, hitting around 161.97 against the US dollar, a level not seen since 1986. That is a staggering number. A currency collapsing to a 40-year low is not a small thing. It's a major macro event. And here's why this matters for crypto specifically. When currencies weaken this aggressively, central banks face pressure to take corrective action. The Bank of Japan could step in with currency market intervention, or they could raise interest rates to try to stabilize the yen. Either of those moves has the potential to ripple through global financial markets in ways that could pressure risk assets, and crypto is considered a risk asset. Here's the more direct concern, though, and it's one that's been discussed in financial markets for a while now. Japanese investors, including large institutions, have historically held positions in crypto assets. When the domestic currency is under this much pressure and financial conditions get tight, there can be pressure to liquidate assets. And crypto, which has not been performing particularly well recently, can be one of the first places that selling pressure shows up. Now, I'm not saying this is going to happen, and I'm not saying it's going to be catastrophic if it does, but it's something we need to have on our radar. The Japanese yen situation adds a layer of macro uncertainty that's real, and that can affect XRP's price environment in ways that have nothing to do with Ripple's fundamentals or the Clarity Act. This is the global chessboard we're all playing on, and you have to keep your eyes on all of it. Let me bring this all together now, because I think there's a really important narrative emerging across all of these stories that's worth articulating clearly. What we're seeing right now is a market that is at a genuine inflection point, not just for XRP, but for the entire crypto ecosystem. You have a major regulatory bill in the United States that could either pass before the summer recess or potentially stall out, and the outcome will have significant implications for institutional crypto adoption. You have the largest single corporate Bitcoin holder in the world restructuring its capital framework in a way that removes a significant tail risk from the market. You have the XRPL being positioned for lending capabilities that would make it dramatically more useful for institutional capital markets applications. And you have a Japanese currency crisis that introduces macro headwinds that could create selling pressure in the near term. All of these things are happening simultaneously, and XRP sits at the intersection of all of them. So what does this mean practically for those of you who are holding XRP or considering adding to your positions? The honest answer is that we are in a period where information and patience are your two most valuable assets. The technical picture shows XRP still sitting at the bottom of the stochastic RSI, which historically has been a zone where XRP has launched significant moves once buying pressure builds. The fundamental picture continues to get stronger as Ripple's technology matures, as regulatory clarity approaches, and as real-world asset tokenization moves from theory to practice. But the macro environment has real headwinds: the yen situation, the uncertainty around the Clarity Act timeline, the lingering questions about broader market direction. Holding through these periods requires conviction in your thesis and a clear understanding of your risk tolerance. We talk about this on the Crypto Strategist constantly because it's the foundation of smart investing. Here's my overall read on the current situation, and then I want to send you off with some final thoughts. The next 2 to 3 weeks are genuinely critical. The Senate comes back July 13th. The Clarity Act either finds its path to a vote or gets pushed toward a recess delay that could kill its momentum this year. Strategy's new capital framework either holds and provides stability or becomes a bigger story if Bitcoin prices fall further and their liquidity gets tested. The Bank of Japan either intervenes in currency markets in a way that destabilizes global risk assets, or the yen situation stabilizes without major global fallout. And through all of this, XRP is coiling, sitting at a technical low on the RSI, sitting at a fundamental moment that could be transformative for the entire XRPL ecosystem. We could be very close to a significant move, and when XRP moves, it tends to move fast. Stay engaged, stay informed, and don't let the noise drown out the signal. That's what we're here for, every single day on the Crypto Strategist. Thank you for watching. Now let's go make some smart moves.